natural gas futures experienced sharp fluctuations before closing lower on Monday, as traders assessed the effects of mild weather and an early injection season, along with the outcome of President Donald Trump's phone call with Russian President Vladimir Putin this morning regarding efforts to end the war in Ukraine. Nevertheless, prices steadied at $4.06, as the call yielded no groundbreaking developments beyond a mutual agreement to cease attacks on energy infrastructure. With traders anticipating potential market shifts, the lack of immediate actionable news kept volatility in check, leaving prices to consolidate at this level. Meanwhile, a possible agreement could lead to Russia restoring gas flows to Europe, significantly boosting supply and likely driving EU gas prices lower. In response to this development, European natural gas prices extended their decline, hovering just above €40, as traders evaluated heating demand and closely tracked ceasefire negotiations between Ukraine and Russia. If this agreement materializes, sustaining U.S. natural gas prices at such elevated levels would become increasingly challenging. A potential easing of sanctions on Russian gas could lead to higher Russian supply to Europe, dampening demand for U.S. LNG exports. As a result, more U.S. gas would remain available for domestic consumption, exerting downward pressure on prices. Nevertheless, I expect prices to hover around the $4 level until early April, when new details about the US-Canada tariff dispute emerge. For now, major natural gas market players are keeping prices elevated despite mounting bearish fundamentals. However, once an agreement is reached and the situation surrounding Canadian gas exports becomes clearer, the weight of bearish fundamentals, combined with declining EU gas prices, could trigger a sharp breakdown. In that case, the $3.50 support may be easily breached, and what concerns me even more is that $3 might not hold as a solid floor either. If that happens, the market wouldn't just experience a correction but could enter a prolonged period of downward pressure, forcing traders to reconsider their bullish positions entirely. That said, this scenario still appears unlikely in the short term. From a technical perspective, natural gas remains unable to decisively break through the $4 support level. A sustained move above the $4.20 resistance would signal an attempt by buyers to regain control, though any rally is likely to be short-lived. On the other hand, a decisive drop below this key pivot could pave the way for further downside, with $3.50 emerging as a likely near-term target if bearish momentum continues to build. Please like, subscribe, and comment to support the channel. See you in the next one.